Come on down, come get them Hollywood trades. We are at it. I was supposed to give an update last night, so I'll just do it this morning. I wish I would have done it last night because obviously the markups are still sovereign here. This is a NASDAQ update, which in turn ends up being an SPX or SPY or S&P and Dow Jones update as well. So I will put those in as supporting evidence for the idea, even though you can clearly see what it is that we have going on right now. It is very blatant to see. As I always say, once you get a bearish block on a daily level, you are bearish. I mean, you will not be bullish again until we get a bullish close. And then there's a transitionary bullishness at that point, even where you want to see the next bar drop into the bar that was closed over and then rally back again. That's when you are fully bullish, and the same for bearish. So if you get that bearish close and the next bar comes, kind of into the range of the bar that got closed over, like this got closed right here. It just happens everywhere all the time. So it's not something you got to cherry pick. It closed under this next bar came up into it, right? And then dropped out. That is bearishness. That's just how price works. You'll see these markups day in and day out. I'm taking a different approach with my channel, with my teaching. The course is coming out soon, and it won't. I mean, there's so many styles and so many ways to learn. I just wanted to add my own take because I have been trading since 2008, so on and off, obviously, but I happen to have just a different, I use legacy indicators and stuff like that, MACD, stochastics, basics, RSIs. And so that will be added. All of my observations will be added in that as well. The Hollywood Trades Price Motion Handbook is also going to accompany that as well. But let's go ahead and just dive into this. And I guess what I was saying is I'm not going to be doing trade like this, trade like that. I'm doing market analysis forecasting. This is the majority of the content on this page is going to be market forecasting. I did release a couple. I still will release market secrets series, and my masterclass series it's pretty much completed. If you watch the masterclasses, which is order blocks, premium discount, and these are just the main ideas. Like, you should just know these ideas. There's nothing special. These are just regurgitated ideas. And then market secrets is more of my in detail things like reapers and stuff like that, things that are kind of eclectic. But going forward, this is just going to be market forecasting. I think it'll add a lot of value, the way that I see the market and the way that I think my strong suit is forecasting the market, just using these basic details that we teach, or that I've learned, I should say, and sharing my insights going forward. Because we were obviously bearish here. Anybody who had a bullish stance, maybe even wanting to target going back up to this level, you never got to close over your lowest reaching block. That is what would make the high frequency traders, the high frequency algorithms, use this very block as a support zone. So it would close over and then it would dip into it, and then we would get this level easily, and maybe this level here easily, maybe even these bars up here easily, maybe even this easily after we close above that. But since we did not do that, right there, I mean, this bar was closed over right here. But again, you want to see another bullish like jet of orders come off of this. So we closed over this, we would want to see, this is how you don't fall into a trap. You got to close, and you don't want to just go in. And you could set a stop loss here, go along here, but this is the controlling force, and this is an FVG. So you really wouldn't want to go bullish until we close over this FVG. And maybe even, I mean, this is just a super bearish zone. Like, all of this got disrespected here. This all got cracked. You have no support from none of these people anymore. They're gone. They've been destroyed thoroughly. All of their stops right here are gone. So you don't have any support here bullish now anymore. So it's just, I mean, it's just free money bearish at this point. I know some people don't know how to trade and don't know how to fade the market, a bullish asset. They don't know how to do that. But this is just pretty simple when you start getting these bearish arrays. You don't have to be afraid. Like, this was an easy target before this turned into this. This was sell side target, right? Because it's just, we're bearish. So you always just keep marking your targets in the sell side. Like, this will be a target until we start closing over, and then we'll be bullish targeting, which will be this, and, you know, all of these highs up in here. That's just how it goes. And that's pretty much that. I mean, there's not much to really discuss as to what's happening here in this very market. So let's just look at a higher time frame. Let's just start looking at higher time frame perspective. Not much to discover here as far as higher time frame goes. I mean, there's a break point, we broke it. There's a break point, we broke it. I mean, all of these will be used as resistance until we start getting bullish closes. And again, a lot of that hourly fallout, even though we didn't hit the hourly FEG, one of the main strategies of the new age traders is to use this 4-hour FEG. The 4-hour FEG is a gold mine. You will retire your family using 4-hour FEGs and then continuations out of that FEG zone. And that's what happened here. That 4-hour FEG, this 4-hour block closed. This next 4-hour kind of dipped into it with its mohawk, as they say, with its wick. And then next thing you know, we got a bearish close right here. What happens in the next bar? Let's just zoom in on this because these are just basic principles right here. I don't like making these videos no longer than 10 minutes. You got to be able to digest these quickly, I believe. But just look at what happens there. You got, let's just mark it out. You got this is how I always mark my charts. You'll never see different markups ever in my charts than what you, all of these labels that I have are all the labels that I use on everything. All the time. I don't change these. These are just all of my tools. So you can copy those. I might go over those one day, just a tools workshop and things that I use to mark my charts. Everybody should have the arsenal of that. But staying on track, this is a close. And what happened in this bar? It dipped into it. That means it gave a chance for these trap trades to leave the market. This is something that I feel is something that needs to be adhered to. Like, even if you were bullish here, if you get a bearish close here, as soon as you dip into that bar, you need to be leaving the market as well. Anyone who did not leave the market as you got a chance to leave this market, as it always will do after a close, it should do. I would say about 75% of the time it will do this. The other 25%, it will just leave a gap right here. But at some point, it will come up into the previous bar, and that is when you should leave the market. That will keep you out of so much trouble. And we're going to elucidate that in the Hollywood Trades price motion handbook and the course, because that is something I believe will keep a lot of people out of trouble who don't really adhere to that mitigation zone and save their asses. But this is pretty much it. Again, we got this close point here. I'm not so much concerned about this point right here. I'm more concerned about it clearing this and maybe using this as a buy zone eventually, so we can get, we'll get paid. We'll be paid handsomely if this turns into a buy zone. We can easily, this is an easy target, of course, and this is the volumetric point of control here. So all of this is easy targeting. That is, 1,000 handles, right? Some to up here. Like, yeah, that's literally 1,000 handles. If you're trading $1 per handle, that's $1,000 waiting on you right there at low leverage. Cheers to the people who are trading more than $1 per handle. You will be paid handsomely coming back into this FVG. There are a lot of misplaced orders in this range up here that we will love to come back up to greet and collect in this POC. So that's what we have right there as far as NASDAQ. We are at 10 minutes and 30 seconds right now. Let's just go ahead. Let's look at the dollar index. The dollar index is not especially strong right now, which just means the whole market is just being demonetized right now. We don't. I haven't done too much fundamental analysis to see what the actual tone of the market is right now, but we are not using. It is. We are not using. We are not countering the dollar. We are not risk off, risk on type of environment, because this would tell us that we are risk on. But if you look at the chart, we are not risk on. We are risk off right now, risk averse. Let's look at the S&P. Of course, the S&P follows the same type of narrative, and the Dow Jones is also going to be following this same type of narrative. Let's go ahead. This is a deep dive to start the week, so I'm going to go a little bit longer on this one just to show a little more. Let's look at these imbalances, because that is what ultimately the market will do. It just, whether it's robots or whether it's people, it doesn't matter. This is just what the market does. You will seek to retrace or correct. This is what a correction is. It is correcting these areas that orders just got left behind. It's collecting these orders. This is your ultimate support zone. We could throw a fib on that as well, but I believe at this point it's pointless. Funny enough, I saw this as a CRT high, but this became just a BPR, and it just was, once it balanced, it didn't need anything anymore. The rest of the market was bearish. It mitigated these areas here and this, because this would have became a sharp boundary after it got closed over, or under, I should say. The middle of it would have been the sharp point, which you see is a very sharp point. And then, of course, balancing this whole thing, it just didn't have the need to even come up here anymore. So we're not even going to do CRT high right there. Now we are just going to do, and I am reluctant to call this DOL buy side because we are just seeking sell sides right now. So if anything, all of these lows, this low would be next. This is the next low. But this IFVG here is going to be very strong. This very block right here, after it got closed over, it never came back. See, it closed over this and the price never came back to it. So that's a target. So even all these bars came here into the all-time high. Once we started getting bearish close, this was grass, because this one already got it closed over and this one got tapped into, right? So Dow Jones was just not a support. None of this is support, because we closed over this last bar here and never came back. So that is going to be an algorithmic target. What we're going to do here is, because we have a strong body, I am going to just highlight this body out right here. This is the daily chart. So I'm going to highlight this body as a bullish order block on Dow Jones. And this is just basically what we're dealing with right now on this array. This is our support zone. This is how price works. This is, you'll see me mark. Sometimes I'll change. Sometimes I'll just put a line. Sometimes like I'll put a line here or a line here going across, but I want to see what happens at this body. You see what I mean right here? I want to really see what happens at this body. And this is where we should be getting that support at. So I'm not going to cover gold or Bitcoin in this one. The indices, the US dollar is what I'm sticking to here. So this is pretty much what we have. And matter of fact, I didn't go to NASDAQ daily. So let's just look at NASDAQ daily. I didn't want to go to NASDAQ daily because this is just like a daily consolidation range. There was imbalance here, but I don't foresee, unless the whole market gives us a rally zone, we won't see a rally here. So I didn't want to mark up too much. I mean, as far as like support, I feel like this could be misconstrued as support, which I don't think any of this is actually support in a way. I'm not sure. I don't know exactly what we're doing here. And in the weekly is what I will really be concerned about here. This IFVG here is a support range on the weekly. We might be seeking these lows on the weekly because these are double lows right here. This low didn't sweep this low, so these are kind of a juicy algorithmic target. It's the low of the FVG, so I don't think I want to mark it. I don't like marking lines at the lows and highs of FVGs or previous imbalance ranges because we're just using this high. Really, this high was the determining factor for this support, this very strict support level right here for these bars. So we're still using that high in this. That's what the bottom of this is here. So we might wick that, or we might even, I don't know, this body never got touched after it got closed over. So maybe it wants to, you know what I'm going to do? This was a breaker, but what I'm going to do is this, because this is the nearest imbalance range on the weekly. So we may be possibly looking at this imbalance range here on the weekly. This right here is a monthly FVG. This can get kind of crazy here, being a zone that got closed under on the weekly. I'm not going to go to the monthly chart in this one because we are already almost at 20 minutes, but I hope that clarified the market direction that we're looking at here. We are bearish. I mean, all these levels that are getting closed over, like this right here, got damn near closed over, then it dipped up, came back down. All these levels that are getting closed under will be resistance. And that's what we call the Hollywood. I call it the Hollywood bar method. And you're just using the close, open, high, low, close of previous bars as support and resistance. I feel like it keeps it really simple for you, what you should expect as price grows on every time frame. But I'm going to close that out right there. Go ahead and make sure y'all share this, like this, comment this, subscribe to this, because this is something that will keep you on the boat going forward in your market analysis career. And without further ado, I bid you adieu.